Good evening and welcome to Business 7. My name is Felipe Sosikum. I'm joined by my partner in crime, Jomari Daddy.
Indeed, partner in crime. Thank you very much, Philippus. And we have a jam-packed show for our viewers tonight. Interest rates, construction, very interesting African news, and global news in terms of the IMF. So please stay tuned. We'll be right back.
Connection. It's in the human touch, the feeling of belonging. It inspires us and empowers us, creates clarity from complexity. It starts new conversations, unlocks the power of advice, and makes an impact on your life. At Alex Forbes, we pioneer insight to provide you with advice that connects your decisions of today to your impact tomorrow.
Before we turn our focus to Namibia, Philip, let's take a look at the main business highlights on the African continent in the past week, as supplied by Reuters.
Here are 5 stories that made business headlines in sub-Saharan Africa this week. Countries in the West African Economic and Monetary Union are struggling to raise funds on the regional capital market. That's according to financial market sources. Investors are demanding higher interest rates as liquidity tightened. Ivory Coast failed to issue local currency debt in March, while Senegal, Mali, Niger and Burkina Faso have cancelled or postponed issuing bonds in recent weeks. The source told Reuters that the failure to raise much-needed funds from the regional market may force states to look for alternative, cheaper financing sources such as the International Monetary Fund to avoid budget shortfall. Ivory Coast has done just that. The International Monetary Fund has agreed to lend the country about $3.5 billion. The loan program will help preserve the West African country's fiscal and debt sustainability and support reforms to promote more private sector-led growth, according to the IMF. Nigeria's Senate has approved China Development Bank to fund a new rail project. The country's Kaduna to Kano rail project cost $973 million. This came after another Chinese lender withdrew from the project in 2020. Global carriers warn that concerns over blocked airline funds in Africa and elsewhere could lead to interruptions in air services if there is no progress in talks to unfreeze money owed. The International Air Transport Association said in a briefing about $1.6 billion of funds are being withheld in various African countries due to currency shortages or other problems. And finally, back in Ivory Coast, a flagship program launched in 2019 that promised a living wage to cocoa growers has left many worse off. More than a dozen Ivorian farmers said they were paid well below a price set by the government. It was itself lower than the price promised when the scheme was launched. Industry experts blame the situation on surpluses that have kept cocoa cheap globally, as well as on chocolate companies, global commodity buyers and intermediaries in the field seeking to protect margins. They cited inherent flaws in the government program, including a lack of supply management.
Philip, let's turn our attention to one of the hot topics the past few months, and no doubt will remain so for the rest of the year: interest rates. In a nutshell, why are people up in arms about interest rates?
Yes, it's a very hot potato in the market at the moment. It's a painful move by central banks, but a very necessary one because it's very important that we protect our currency, the dollar in our pocket. And for the South African Reserve Bank's decision to increase interest rates, I think 2 weeks back, it's really just to to protect the value of their currency, and also just to make their money market attractive to foreign investors, because when interest rates are low, investors will be taking their investments to markets that are more lucrative. So because Namibia is pegged to the rand, it's sort of also affecting us.
Indeed, as it's very much the saying goes that if the rest of the world sneezes, Namibia gets a cold. So it's very much that catch-22 situation. But let's listen to Simonis Storm economist Theo Klein when it comes to interest rates.
So at this point in time, Philip, we are still, we increased our inflation forecast from 5.3 to 5.9% for 2023. And I think one of the biggest risks to this is the fact that NamPower has requested about a 16% increase in electricity tariffs. We actually forecasted a 25% increase. And when I spoke to some of the NamPower workers, they actually said, we should have asked for roughly 24, 26. So we were fairly accurate in that, but at the end they only asked for 16%. And why this is crucial is because the housing and utilities category is the largest, it has the largest weight in our consumer price basket. It has a weight of 28%. So any upward inflationary pressure out of this category will be a significant driver of inflation figures likely. So the Electricity Control Board has to announce what they approve in April, and then these new electricity tariffs will be effective from July. So I think in the second half of this year, you can see much higher electricity prices coming through, and then that will also lead to an uptick in inflation figures.
Yeah, and looking at food inflation, for a country that is highly dependent on imports, how scary is the imminent drought to Namibia?
So that is very concerning, with El Nino having, I think, over 70% probability in our next summer season. We do know that data from NamWater shows that all our dams across the country are between 10 and 15 percentage points lower than what they were last year. And then also the rivers in the north are also at much lower levels than what they were 12 months ago. So I think, all of this is negative for the the crop farming sector. So we are fairly negative on growth in that sector for 2023. The Namibia Agronomic Board also have forecasted shortages in most of the horticulture products that they cover. So they forecasted shortages in over 60% of the different food products since between January up until I think June or July of this year. So I think all of that is negative, not just for GDP growth in the agriculture sector, but definitely also a risk for food supply locally in Namibia. The other problem is with load shedding. In South Africa, the farmers cannot use their irrigation systems, or they cannot pump water from the boreholes as efficiently because of inadequate electricity supply. So even in South Africa, you have major shortages being forecasted in terms of food production. So I think Namibia and South Africa is likely to find themselves in a very vulnerable position in terms of food supply, and that means our food prices will be determined by global food prices. And I mean, global food prices are showing signs of declines, but then again, it depends on where the rand is. If we have a weak rand, then that is definitely inflationary for us. But all in all, Philip, I would say, I don't want to say we'll be in a food crisis, but I do expect shortages here and there, and for food supply to reduce significantly in the next couple of months in Namibia. And that will definitely then push up prices once again. So households obviously already facing with higher living costs since last year, but I think, based on everything that we see now, it can get slightly worse.
So lastly, what do you think needs to be done to boost food production locally so that we cannot be too dependent on other countries? Because as we can see now, it's because of our over-dependence on other countries that food prices are going up.
I think two things come to mind, Philip. The one is we need better management of certain agricultural projects, especially where government is involved. We can't just buy equipment, give land to people and expect them to carry on their own. I think you need ongoing support and management or oversight of these green schemes and that are running across the country. Then I think the second thing is, I talk to a lot of farmers and they're not incentivized to carry on with their businesses. And the reason for that is they're not getting the price that they want. So to some extent, wholesalers might be abusing their market power to push prices down, because farmers complain to say they can't get the price that they would want to either break even or to earn profit. So, you know, you hear of some farmers saying that they actually want to sell their farm and get out of the farming business, or they want to stop farming but use their land maybe for a lodge or a campsite or whatever else they can do. So I think they are not incentivized to necessarily carry on with their operations. So, you know, I think that is once again where you probably need government regulation to assist the farmers to be able to charge the prices that they want. I don't know, I think those are the two things that come to mind for that.
Theo, thank you for your time and for sharing your expertise.
Thanks for having me, Philip.
Philip, you recently dealt with the latest economic growth figures that came out from the Namibia Statistics Agency, and construction still way, way below what it was 4, 5, 6 years ago.
Yeah, it's such a very important sector, but it's very concerning that its contribution to what's gross domestic product is very minimal. So yeah, obviously analysts are expecting growth in the construction sector to remain sluggish. So yeah, it's not good for the economy at all.
We invited Bärbel Kirchner. She is the CEO of the Construction Industries Federation to the BIS 7 studio to discuss this topic. Construction remains one of the pillars of the Namibian economy, and we're happy to welcome the CEO of the Construction Industries Federation, Bärbel Kirchner, to our studio. Hello, Bärbel, and welcome.
Thank you. Thank you very much for the opportunity. It's lovely to be here. Thank you.
The Federation, very busy this year, and just last week you had a meeting with the African Development Bank. What spurred this meeting?
Thank you. I think it's very important to know that we are due, there's likely to be another project being advertised about the railway line, the upgrade of the railway line between Karabip as well right up to Tsumeb. And that, of course, for us is very important that we do engage with the representatives of the African Development Bank that had been in Namibia last week, to ensure that we have majority Namibian-owned companies also involved in the project. In the past, that had not been the case due to pre-qualification requirements, which had excluded our Namibian contractors, and to the extent that they actually could not even qualify during pre-qualification. And that, of course, we want to avoid in the future. Yeah.
And the meeting that took place, are you happy with the outcome, or was there any agreements? Or
I think just to perhaps also reflect on why for us it's so important, because in the past in 2018 there was also the railway line project that was also basically between Walvis Bay and Karabip, Kransberg, and at the time Namibian contractors had not been involved. And similarly, there was also a African Development Bank finance project, the Phase 2A from Windhoek to the international airport. Again, Namibian contractors had not been involved. And of course, we really like to avoid that, because we need to create opportunities for our local industry, which really was in a very terrible state since 2015 or 2016. So it's very important that we get some more work done. And yes, I hope it will lead to a positive outcome. I think our engagement was positive. It was actually also held at the Ministry of Works and Transport, which we are very happy about. Yes. Very encouraging. So I think there are similar interests to obviously get our local industry more active again, I hope. But all in all, I think we shared our concern, and we've also placed emphasis that Namibian contractors have the capacity, they have the technical skill to participate in these contracts. It's often the financial criteria that exclude our local contractors, and that is due to the size of the project. If the size of the projects were somewhat smaller, if the lots of the sort of project are smaller, then Namibian contractors can more actively be engaged. We know that there are there's legislation and policy at the African Development Bank, which obviously is determined also by, I believe, the member states or the members of the bank. So when we engaged, we heard that obviously that is a requirement that one would have to adhere to that. I think one needs to take that into consideration, but at the same time also the local realities. The reality of our economy, that we've got still, our construction sector in 2016 was 7.2% of GDP, now we're below 2%. And also we've got a huge unemployment rate in Namibia, especially unemployed youth. We need to get them actively involved, and especially if you think that in construction you can create jobs very quickly. Right. And so, yeah, I think it was positive. I think we have been heard, so hopefully that we will see positive results of that.
Certainly sounds encouraging. We are hoping for the same from our side. You touched on it briefly just now, saying or sketching what the current state of construction is. And yes, I remember the boom period.
Yes.
I mean, construction was pumping billions into the economy. Post-COVID and post-recession, how bad was the construction industry hurt? And have you got a vague estimation of closure of companies or jobs that have been lost, etc.?
Yeah, I think it's very difficult to say at this stage, but if the membership of the CIF is an indication, we've lost about 50% of our members, and that's not due to us not providing a service. It is a fact that many of the businesses have closed down, or basically are just dormant and therefore really do not have any sort of turnover to contribute any form of membership or any other sort of marketing activity. But if you look at the industry as a whole, in 2015, like I said, 7.2% was our contribution to GDP. It's now below 2%, and jobs have been lost around about 40% of jobs in the industry have been lost, and of course it's devastating because many people that have been actively engaged in the economy are no longer earning an income, and it really puts their families into a very, very difficult position. And we believe that construction can really create a lot of jobs. So it's important that our local industry gets active again. If you have foreign contractors involved to the extent it's currently the case, you might have a limited local involvement, but of course the money is not circulated in our economy, and the contribution to tax is also much less to our government revenue, which again has future consequences as well. Yes.
Thank you so much to FNB for this opportunity. Thank you so much to FNB. What an experience. I never got to do shopping in 5 minutes, but look at all this.
Well, the Federation very actively lobbying for the establishment of an independent construction council. Why is this so important?
Thank you. Yeah, I think we need to remember that the CIF itself is a member-based organization, and we can represent the interest of our members of the industry, but we are not a policing body and we are not a statutory body, so therefore our mandate is limited. But we find that it's incredibly important that our industry is regulated because, I mean, at the moment anybody can operate in our business. Any company, any small organization, practically without the adequate skills can participate in the construction sector, which is dangerous. Because obviously you wouldn't go to a medical doctor that is not registered. You know, you want to achieve a certain quality of workmanship, and also you want to see that projects are being completed. I think since 2006 we have been lobbying for the Construction Council. In 2012 it was tabled in Parliament. At the time it was thrown out again. I think the concern was whether there was sufficient stakeholder involvement and or whether it was debated enough, which I think it was at the time. But another concern was that it might lead to exclusivity, and that would only benefit a certain contractors. Yes. And that is absolutely not the case. On the contrary, actually what you would find is that everybody would be more involved optimally in the construction sector, of course, if they have the right capacity and adequate skills. So I think what you have at the moment is a situation that everybody's competing for the same slice of the cake. You have the larger contractors involved in a space where SMEs should be involved, solely SMEs, and then you have also foreign contractors involved in the same space. Also where SMEs are involved. So basically our local contractors are being displaced. And so what we want is that there is place for everybody, even foreign contractors, but not where there is Namibian capacity. I think I want to guard against the impression that being created that we do not want to have any foreign involvement. We need investors in Namibia and we need foreign involvement. We need to remain competitive. But at the same time, there needs to be the right place for foreign contractors and also for the larger contractors. They shouldn't compete with the SMEs. Yeah.
Well, you make a very, very compelling case, and we wish you the best with your efforts. Thank you very much for joining us in the studio.
I thank you very much.
Every day, you make choices that make you legendary. Journey together with us on the path to securing your legacy as a member of the League of Legends. With the Select Platinum Bundle Fee Premium Bank offering, you will access tools that will enable you to thrive. If you earn 850,000 Namibian dollars per annum or more, you can apply for this offering today via bankvinted.com.na for only 447 Namibian dollars per month. Bank Vinted, a member of Capricorn Group.
The International Monetary Fund last night released its World Economic Outlook. Philippus, what do you make of it?
Yeah, it's the International Monetary Fund estimating that the Namibian economy will grow by 2.8 this year, and that is slightly lower than what the central bank forecast at 3%, and also the Ministry of Finance estimated that the economy will grow by 3.2%. So IMF's estimate are slightly lower than that of the ministry and the central bank. And the IMF attributed this growth risks, because there are risks there, such as the high inflation and rates that are expected, as well as rising interest rates.
Indeed, and not going to be an easy 2023. We're playing out with this video by the IMF on its growth forecast. Thank you very much for hosting us, Philippus. Until next time, goodbye.